In this video, I'm going to go over the 4 steps that I follow under every single trade that I place. And this is something that is so important because it's a layered approach that covers every single aspect of what a system should have. It keeps you out of the unnecessary losses. It controls your overall trading and gets you on side with high quality frameworks. This is also a process that is repeatable in the market. So after you understand it from this video, you can go out on your own and seek these opportunities for yourself. Getting right into this, we're going to start with an overview of these steps. And the first one is going to be framework. This is where we're looking to use a higher time frame alignment to set a bias and an idea that we think the market can move directional on a certain day. That's going to start with using the daily time frame. I don't go above that to the weekly or the monthly because I feel those are too high of a time frame in terms of short-term trading, because we're looking to capture an intraday opportunity. And when you think about the weekly or the monthly, if you're trying to make an assumption on that time frame, you could be trading in the wrong direction or with the wrong bias for a week or for a month, and that is pretty damaging for an intraday approach. So when we use the daily chart, that is the time frame that we're looking to focus on, because we can go in and out each day as the market develops, take in new information, and adjust if needed. I'm also not going to drop below the daily time frame, because then we're getting too much detail that's not giving us the full picture of what we should really be focusing on, because the goal here is to capture expansion daily candles. Once we're on the daily, I'll show you what I use to actually navigate that time frame and how I'm setting the direction and rules around which days and which side of the market I'm looking to trade. The second step is confirmation. This is where we've set an idea previously from that daily chart. Now we're looking to confirm it inside of the day we're potentially going to put on a trade. Confirmation is one of the most important steps because it separates idea from execution. And we all know that when it comes to your results, the execution and the actual decision you make on that idea is what truly matters. So framework is setting the idea, not predicting the market, but saying this is in a framework that can deliver this move. But I need a confirmation. If the market develops in this way, and I use daily profiles as the confirmation, then that's saying the framework is being aligned, the market wants to move in that direction, and I will then consider executing on that trade. The third step is entry. This means we have a framework off the daily that we know is confirmed by a daily profile. So an idea has turned into something that is actionable because the market has confirmed and said, I'm going to move in this direction. Because of that confirmation, I now want to seek an entry to position inside that market because the edge was presented to us. The final step is management, and this is where a lot of people make mistakes. Your management is how you're making profit on your trades. It has to be done in a way that allows your trades to work out, but also is protecting the downside in the cases that you are incorrect. So I'll share with you exactly what I look for, a process to avoid micromanaging trades, because that is the #1 mistake that most traders make, and show you how I'm bringing my trades to a profit target to maximize the value. Here we're going to walk through these steps with a real example of a trade that I took from this past week. And it's going to start with the framework. Like I mentioned before, that is step 1. Framework is going to be focused on the daily chart, which is what we have here. This is Monday's daily candle, and I personally let Monday go and allow that to provide context, because what Monday does within the current week tells me about what Tuesday should do, and this pairs alongside my approach with relevant swings. Relevant swings are the understanding of which daily highs and lows in the market are meaningful, and the idea around them is that we're looking to pull from the extreme highs and lows on the daily to the point that where if price engages them, there is not another daily high or low in close proximity that I have to be concerned with. So I know that the reaction there is truly meaningful, and that is telling me about what I should expect for price going forward. So where are the relevant swings on this chart? Looking left here from Monday, we can see we have a relevant high that was engaged, and I can say this is a relevant swing because there is distance to this next high here. And then off the lows, we have that same idea of a daily swing point that has a large separation from that next daily low. So when price engages here, that is relevant, that is meaningful in the market. And what is it showing me? Because I can pull from these two ideas the two separate ways that the market and these daily candles engage with relevant swings. And the first is going to be a manipulation. And that's what we're seeing in the previous week close. This is Friday's daily candle from the previous week. We traded down into that, and you can see in the wick of that daily candle, that's reflection of a manipulation because we're closing aggressively back into the range after manipulating what is a relevant swing. That there is a signature for me to assume a reversal, and Monday is confirming that idea for two reasons. One is because Monday is expanding higher. That is confirming that we have manipulated this low and are in the continuation. But also because this is a relevant high, how did price engage there? We didn't have that manipulation signature because we didn't wick and close back into the range. We had a deep daily candle closure through that relevant high, and that is signaling at a continuation. When the market fails to manipulate, we assume the continuation at a relevant swing. So that following day, if Monday expanded and put in a low, we have a manipulation from the previous week, a continuation signature of that relevant high. Then on Tuesday, I can assume another day of continuation. Here we'll have this in text so you can see it visually. The low is a manipulation that signals a reversal. The relevant high that we engaged is a close through, and that shows a continuation. We can also bring in the fact that we have these highs above that is acting as its own relevant swing, but we have failure swings up to that point. So we want to see the price draw into failure swings because we're trading away from manipulations, trading into failure swings. So this becomes a target. We now have something to trade away from. We have a reason to assume the continuation, and we also have something to trade into, which are these daily highs here. This here is showing my expectation for what I want to see on that following day. So think about when I was talking about framework, it's an idea. I know because the market did this that I should assume and expect the following day to do this, but we're going to be looking for our confirmation. So it's going to be a Monday, putting in a low, continuing, Tuesday continuation up into these highs. And 50% here is from the low to high of Monday's candle, that entire daily range. And I want to see Tuesday put in a shallow opposing run, a small wick in respect to 50%, because that is going to hint at supporting the expansion move into these highs. So that's my invalidation point, wanting to see a low of day on Tuesday form above that level, and then we can look to trade up into those highs. So this is the idea. Now we move on to confirmation. As you just saw in that analysis post, our ideal development of this day is seeing that shallow opposing run from the daily opening price, and then going into New York, seeing if we have a bullish daily profile aligning with our bias, that we can then say, this idea is being confirmed. We can then move on to entries. This is a representation of that daily opening price for the day. We have that shallow move from the daily open and establishing a low that was traded off of in respect to 50% of that previous day range that we set in Monday's daily candle. That means this is supporting the idea that we can see a sustained expansion move through that daily opening price into the upside and into our target at the highs. The logic behind this is that shallow opposing runs create expansion candles. When you look at your chart on the daily, when you see these large range moves, they're going to start with a shallow run from that daily open. Versus when we see these large wicks, indecisive days, or small range days, you're going to have these really large moves from that daily open. And then intraday, you get this range, slow, indecisive price action that ends up closing back in the range. The way the price moves from the open of that daily candle is telling you and giving you hints at how the rest of that daily candle will print on the chart. So when I'm opening my charts in the morning into the New York session and I'm seeing that shallow opposing run forming a low and trading off of it, I'm viewing it as the wick of this daily candle is established, and now I'm looking to position for the body and the expansion to take place up into my objective. We're also going to be pairing this with the daily profile. We see the London session made a low and reverse price expanding off of that low. And then during the New York session, we were seeing the development of a potential continuation. So the London reversal is one of the 3 daily profiles that I look for. And to me, it is an ideal daily profile because it sets the New York session as a continuation. We're confirming this idea of the bullish London daily profile by looking left in price. First, starting at that low of day, we have down close candles forming the low. We go back up to that opening price, draw that out. We have the close above. That is the change in state of delivery. That's our reversal confirmation of the low of day. We expand off of that point into the New York session. We've run out a short-term low, formed opposing closed candles, and then we are looking for price to get that continuation signature because I do not enter on the reversal. I don't need the high. I don't need the low of day. I want to capture the continuation and be on side for the expansion. Think of the body of that daily candle. So this is the signature that I'm most focused on. And since it's not yet confirmed, we need the closure above this series of down close candles. We know that that next candle is at 930. So we're being led into the 930 open, which is not an issue, but we understand volatility is going to be hitting the market at that time. That can even act as confluence if we do end up getting that closure above, which is going to provide us the entry signature that we're looking. So we'd have the framework, we'd have the confirmation in the daily profile, and we'd have our entry signature where we'd be protected in that market, placing our stop loss and setting ourselves along for that ride, for that daily candle and that bias to play out. Now we can introduce each pair across the indices market. We have ES, NQ, and YM. Before the open comes through in the market, my focus is solely on ES and NQ. This is where I'm setting the framework, getting my confirmation. This is how we're staying one-sided in the market. I know I'm looking for the upside, and I'm pulling that directly from ES and NQ. However, when we get post-open, because we're being forced into that to seek the continuation entry, which was not yet confirmed, now I can introduce YM, because this is a time of the day right at the open where YM can provide us extra context for which pair is stronger, weaker, which one I should be focused on, which one is providing confirmation. It's giving me an idea that I want to see after the open. Before it, I'm not as concerned, but once we get after open, this is where I'm starting to bring this idea in. And what we see here is extremely important. What we had on ES is we're looking for this closure above, but post 930, it's not getting that closure, which is not validating the idea. So it did trade above, but we're waiting for the candle to close, which it didn't. We have NQ, we're bullish, being the weakest pair, coming back down into that intraday low, while we see YM all the way to the right is providing that closure on the signature exactly as we were looking for on ES initially. This is giving me an idea on a few things. The first is that ES is not validating the idea, so I'm not entering there, but I'm also looking at NQ as the weakest pair across the indices. The framework and the bias is still bullish. That is not going to change because of some intraday price action. But what I'm seeing here is when NQ is the weakest pair, that intraday low is meaningful. That's a relevant swing on an intraday basis. There is nothing below that intraday low that the weakest pair needs to run out before reversing back higher. So we're manipulating a very important low in the market on that weakest pair, while the strongest pair is validating that signature. That's telling me two things. One is we're creating a divergence and expecting that because the framework is bullish, NQ will then start to turn on the weaker pair. And because it's going to start to turn, we have that divergence on YM. We have it stronger, so we assume better follow through. But I can position on YM because if the weakest pair is reversing, the strongest pair is going to expand, and that's protecting my stop loss when I'm going to look to enter on this and place it at this opposing swing. This is where we can compare NQ and YM together. Lower low on NQ, higher low on YM. This is validating the idea, getting that closure above. That's the entry signature and the pair, because it's stronger, that we're looking to position on. Finally, we have that confirmed closure. 930 acts as a confluence. So I like to see that 930 is supporting that idea, getting the closure above. Once price gets that new candle open, confirming this closure, I am then taking that as an entry. Stop loss on the other side of these down close candles, and I'm looking to position for that expansion move up into the highs. One important thing to note here is that I am taking my entry right on the open of that next candle. I am not waiting for the retest of these opposing candles because there is not a guarantee that that is going to happen. This is a good example that it does retest, but there's also going to be times where that's not the case, and I'm not going to allow a few points to be the decision maker if I take a winning trade or not. I've done all this work on the daily profile, waiting for the right entry, choosing the right pair. This is not going to be the difference between that trade or not. I'm willing to give up a few points. If the risk to reward still makes sense on the open of that new candle, I am taking that entry, ensuring my position in the market, because this is not a guarantee, nor does it change the probability of the outcome. So I want to get inside that market and position for the move. The fourth and final step is trade management. We have the framework from the relevant swings, manipulating the low, continuation through the high, a draw of failure swings above. We have the confirmation of a London reversal daily profile. We have the entry signature after open with confluence and choosing the right pair. Now we need to manage that trade, allow it to work, and bring it to our profit targets and maximize the value that we're being offered. The first and most crucial part to trade management is I want to get out of the way of the market. The biggest mistake, and the one that I was referring to earlier, is micromanagement of positions before they either work out in your favor or stop you out at the invalidation point that you set. One way to do this is by setting a risk to reward threshold, whether it's 1R, 1.5R, and saying if the market does not reach to that objective or does not stop me out at my initial stop, I am not touching that position. I need to be either proven wrong or I need the market to start working to some extent before I start touching that position so I don't knock myself out before this begins to play out fully. We have a relative example of that here where the market ranges around my entry for around 20 minutes. And this is what I'm talking about, where a lot of people may see that as this trade is not working out, I need to exit this. And then suddenly it's working right in their favor. We want to completely avoid that as a possibility. As this starts to break, my initial target is a risk to reward based. I want to see 2R on my trades. That is a baseline for what I'm looking for. I'm a lower frequency trader, so 1 to 4 trades per week. I want to be reaching for 2R because I want to be rewarded for that patience. That's where I'm going to take my initial scales. So when we make that little bit of a retracement, that move back up, this is not concerning to me. But once we get there at 2R, that's going to be my majority scale, meaning I'm taking 50% or more off of that position, but I'm going to let some run because my trade management is not fixed. It's dynamic, meaning in this context, I'm assuming that even past 2R, there's room on this trade because we're thinking back to that price objective. We still have those all-time highs open. I'm on the leading pair in strength, so I want to see that continued follow through to get to this high, which you can see here, we eventually did. That is my final take profit because this in itself is a relevant swing. It's an extreme of the market. There is not another high above that in relation to price that I need to be concerned with. So once this is reached, I'm using that as a profit target and closing fully out. This is that full trade example here. We get that 2R scaling out initially, trailing that stop because we formed an opposing candle in that continuation that was closed through so I can protect risk, allowing the rest of those contracts to play out. And now I'm out fully at that high, that all-time high target that we set in the previous day saying price should draw here. And because that's a relevant swing, I don't have any expectation beyond that. Once that strongest pair hits that target, I'm getting added value beyond my 2R because my trade management is not fixed and I'm taking that extra profit, closing it out, and that is the end of that trade. With an overview of the 4 steps and the trade recap out of the way, you now have an understanding of what a real system should include. Those 4 core principles that have a real purpose and intention behind them. Now what I want you to do is go back into your own charts, start on the daily, look for those relevant swings, practice identifying them, and see what the reactions are there and what that means for price going forward, because that's your first step in setting the framework. Then once you have a bias, look for a small wick opposing run on that daily candle in alignment of a bullish or bearish daily profile, because that's saying my idea is working out and the market wants to move in that direction. If you have a confirmation, then you move on to entries. The key with this here is in an expansion daily candle, which is what we're trying to capture. In that continuation, the expansion move, opposing candles that are closed through are going to be respected in the continuation. That is the idea that you really want to note. Then when it comes time to manage that trade, you want to remain mostly hands-off until you're either stopped out or you reach a certain risk-reward threshold. You're targeting 2R, but there's potential for more on that trade based on what that day and what price is telling you. And through time and repetition in doing that, you're going to find a lot of consistencies, both when looking back in price, but also in a live market. And that's going to play into how you execute trades going forward. With that said, that is everything I have for you in this video. I hope you found it valuable, and I will see you in the next one.